So hi guys, good evening everyone. So welcome to this advanced class. Yeah, this is the Forex Dynasty live. Yeah, so hope everyone is ready for tonight's class. We're gonna do about fib retracement. That's what we're gonna learn today about fib retracement, Fibonacci retracement in full. Okay. So let's get to 60 people so that we can start our session right now. It's all about fib retracement today. How to use fib, how to predict fib, how does fib work. You guys are ready to ask any question on what fib how fib works, yeah? So feel free to ask any question on it about Fibonacci levels. Okay, so guys, yeah, what about okay, before even that, yeah, let me just talk about gold kidogo for the traders, for the full-time traders who are here, for how to predict it very well, or my views tomorrow. After today we had some very huge CPA move in the market, which ilikuwa leo, because I hope you guys know how to take fundamentals. Nakuja just to search the Forex Dynasty here, sorry, for calendar. Once you search calendar, itajileta all this zone to this view. Calendar yako itakuwa hivi. So today being on a Wednesday, yeah. So this week will be on a Monday, Tuesday, so Wednesday. So today's on a Wednesday. We had a CPI news at 3:30 p.m. Yeah, we had some news at 3:30 p.m. Kenyan time, whereby if you can see the market here, the market has a news ilitoka. That's why you have seen gold behave like this. Ukiangalia the market pumped and then sold. So ilipanda juu alafu ikashuka with a very shortest time. If you can see on the lower time frame, let me just go to the time frame that maybe the movement happened. This is where now we had the news. Look at this. Out of 2 minutes, the market pumped above for almost how many pips, the up and down. So if you can check this, yeah, using a price range, the market ilipanda kwanza for almost 400 pips and then drop like 400 pips down. So for 50 pips up, for 50 down. Okay, so ikapanda juu 400 pips and then ikashuka chini 400 pips in a less than 2 minutes, guys. Can you imagine that movement? Yeah? Can you imagine that movement? Ikapanda 400 pips juu alafu ikashuka 400 pips chini. You see? So it's all about, first of all, it's all about knowing it's all about knowing, first of all, is this news coming positive or negative, or are you going, or are you planning to not trade at all? Because some of traders are planning, okay, it's better even to trade to don't trade this risky news and just wait for the technical and then trade. You can maybe choose. You can maybe trading fundamentals, or you can also just trading Technical, we can trade both like us. For us, we trade fundamentals and technical all. Because sometimes if you don't if you don't have an entry on technical, maybe fundamentally you have one, and maybe if you don't have fundamentally, maybe technical. So if you have fundamentally, maybe technical, you don't have. So it's like that. So it's nothing like always. Hakuna kitu yenye we can say that is always inakuanga tu now and then. Now and then 100% sure. No one knows about it. No one knows about it. Okay, so it's all about knowing or first of all predicting the news, knowing how if it's gonna itatoka positive or negative, you know, all of those things. So for example, today news, if I come here on the CPI, today we had a strong dollar. Strong dollar, which means what? If now it's a strong dollar, something like USD JPY, we anticipated it for it to buy and gold for it to sell. That's why in the shortest time, like 1 minute, on 1 minute candlestick, the market sold. Okay, so inakuanga on the lower time frame movement, inakuanga sana. I believe so. If you've been following us on the fundamentals way, we trade them using orders, because no one is sure. No one knows how the data will come. It's all about just predicting it. And yes, it's all about predicting it. But I always prefer using orders, which is a buy stop or a sell stop, to be safe. Okay, to be safe, I prefer them using buy stop or sell stop. Okay, now in this case, yeah, this is gold on one minute time frame. Obviously, we can't even start analyzing the market on a 1 minute time frame. We start the market analyzing on higher time frame, e.g., daily time frame, 4 hour time frame, and so on and so forth. So before even I go to Fib, let me just go on a daily time frame first of all to show you guys what is the trend of the market. What are we predicting tomorrow? Are we bullish? Are we bearish? Or what is it for sure? Now here we are using the liquidity concept. Using the liquidity, for those who know about liquidity, because I'm gonna talk about it soon. So using the liquidity level, so we have the previous day high and then the previous day low. So if I come back here on a daily time frame, you have the daily, this daily candlesticks here. So tunachoranga the previous day high, then the previous day low. So if I come here, draw the previous day low, and then I come here again and then draw the previous day high. So nishachora candlestick mbili, previous day high and the previous day low. Okay, previous day high and previous day low. After that, okay, where do we have a liquidity graph? Is it upside or downside? Is it a buy side or a sell side? In this case, we have a sell side. The market has already grabbed the previous day low liquidity. See chini, it may grab juu, it may beat the previous one. So it has already grabbed the previous day low, and now in the next maybe 2 hours 42 minutes, if that candlestick maintain that momentum and then holds below, okay, I mean, if that candlestick maintain that momentum and holds before the day closes, it could to be below. It shows that bearish are in place, and we have a liquidity grab above. So which means that this market is supposed to drop massively. Okay, it's supposed to drop down because we already have a previous day high liquidity grab. So it shall grab the previous day. So potentially a drop on this market. So I'll be potentially looking for drops opportunities, not buys, because of the liquidity wise. This is not technically. I've just used the liquidity wise, yeah. And then you have seen the market has already grabbed the previous day high. Okay, so this is what I mean. If you have on the liquidity way, tunaangalianga how the market is behaving, how the market has grabbed the levels and stuff. So you have the, let's say for example, the daily time frame, because tunaanzianga on the daily. You have this daily candlesticks here. Okay, and then now we have the wicks. Kuna hii wicks here, this maybe let's say this candlestick here. So we have that wick above that level, or above that candlestick. I'm just using as some experience, an example. So we have two candlesticks there on a daily time frame. Look at that very well. So now we come here, we draw the previous day high. This the previous day. See candlestick leo, the previous one. Unachora the previous day high, then unachora the previous day low. So we have two candlesticks at that zone there. The previous day high and the previous day low. After tumechora the previous day high and the previous day low. So unaangalia now the current candlestick. Ambayo current candlestick ni ushachora the previous day high and the previous day low. So unaangalia the current candlestick. Alafu ndio unaona how is it reacted. No. Ukiangalia hivyo, unaangalia kama imepita ni gani imepita chini ama juu. For example, wacha tuweke hivi ya. Jaribu kuangalia imepita above the previous day high. Okay? In this case, imepita the previous day high kidogo juu. What does it mean? It means that isha grab liquidity ya previous day high, of which ikifunga hivyo in the next how many minutes? In the next how long do we have? In the next, let's say 2 hours for that candlestick to close. The next candlestick will continue to drop because it has already grabbed the previous day high liquidity. Isha toa stop loss, isha chukua more money for it to continue going down. So hii market iko na more momentum of it going up. If it grab the previous day low hivi, now it shall grab the previous day low. So it means that the market will continue going up the next day. Technically, that's how liquidity works. Depending on where the market has grabbed the liquidity, is the previous day high or the previous day low. In this case, it has already grabbed the previous day low. Alafu sasa inamaanisha the next candlestick will continue going up. But in this case, of which now tulikuwa nayo ilikuwa inakaa hivi. Sorry, let's not this one. Of which in this case yetu ilikuwa inakaa hivi. You have this one. The candlestick has already grabbed the previous day high. So which means that the next candlestick will potentially sell. That's the liquidity wise. So kesho will come now, we draw the previous day low, then we draw the previous day high now, and then now we focus on the recent candlestick of the day. Has it grabbed the previous day high or the previous day low? Okay. Now that's liquidity wise, guys. That's liquidity wise. So now let's come to this daily time frame on this market of ours here. So we are on the daily time frame on gold. We need to do it liquidity wise first to see what will our tomorrow candlestick will do. Will it potentially to buy or to sell? So in the next 2 hours, candlestick kesho, are we probably looking for sell or for buys using liquidity? Now, I'll come here on a daily time frame. Yeah? What should I do? The first thing, draw the previous day high and the previous day low. So nachora about previous day high, nachora previous day low. Okay. So now we have the previous day high and then you have the previous day low. Right? Now, with that saying, where do you have a liquidity grab? You have a liquidity grab on the previous day high. Upper. The candlestick has already grabbed the previous day high. The market has already grabbed the previous day high. What does it mean? It means that okay, this market maybe in the next candlestick which itakuwa ya kesho, potentially to sell. That's the liquidity. So sometimes I kwang, not each and every time in a kwanga, but once if you see how is it acting, and then it will be very well. So if a candlestick, tunaangalianga vile candlestick ita close. As it grab, yes. Inafunga below. Yes, if it ifunga below, for more sales. Ifunga above, it means that okay, that liquidity wise is not okay, and we are not supposed to use the liquidity. So we are predicting some sales again on this market now tomorrow because of the previous day high grab. Okay, now we already know on the liquidity wise that we are predicting sales on the next candlestick, which will be on a liquidity wise, yeah, on a daily time frame. So the next day you are bearish on gold because of the liquidity only. You have just used liquidity. Now let's go now to the next. Let's go now to technically. Technically, the trend is bullish, right? Technical. What is the liquidity? We are done with liquidity. We have said the market is bearish because of the previous day grab. Isha grab of the previous day high grab. So which means tomorrow's candlestick will definitely drop because Isha grabbed the previous day high. Na naikuangi kila wakati. Okay. Now with that said, I would like now to go on the lower time frame, e.g. So now technically on a daily time frame on gold is bullish. But remember now, look at this. Whenever guys we have a bullish market like this, or whenever we have a bullish market like this, the market always does a pullback. Inafanyanga retracement for mobiles. Inafanyanga pullback. Inafanyanga retracement. Ndio endelee kubuy. For instance, this market of ours here, the market has did a huge impulsive movement here, right? So maybe dalili ya pullback they are so high. For more buy. So remember first our previous analysis on liquidity, tumesema ni bearish. And now what about now technically? Tumesema okay, this market has already created a new high. So we are anticipating for maybe a drop for an high low, for more buys opportunities on it, right? Now I know if I go on the lower time frame, like for our 2 hour, 1 hour time frame, I know what I'm going to do. I'm gonna look for a retracement so that we can enter on those buys opportunities. Okay. So if I go back on 4 hour time frame, 2 hour, 1 hour, 40 minutes, 30 minutes, I'm going to look for sales opportunities on this gold because I know liquidity wise told me that potential sales coming on gold. Okay. And also technically on a daily time frame, the market has already created a new high, which it has kind of overbought. So kuna hiyo pullback itakuja, kuna hiyo retracement now you are waiting. And that's why now on a retracement, remember you're on a daily time frame. So this is not a one day candlestick drop, maybe 2 or more. Because on a daily time frame, so for maybe another 1, 2, 3 candlestick drop on a daily time frame. You see? So a retracement or an higher low for more buys on it. Okay, that's on a daily time frame though, on technically on gold. So I would like to go on a lower time frame, like 4 hour time frame. And that's a 4 hour time frame on this market. If you can check this very well, the market has been creating higher high, higher low. The market created a new high and higher low and higher high, higher low, higher high, higher low, higher high and a higher low for more long position on it. Long position on it, right? So now this market technically I can call it a bullish. Okay, we can call it a bullish, but remember previously we need bearish. We need bearish. For that market to drop, we need a bearish. But now, technically, the market is bullish on a daily time frame, whereby the market has been creating a higher high, higher low. Look at that. A very clean higher high, higher low, higher high, higher low. That's a bullish trend. So technically, this market is supposed to buy on a 4 hour time frame. But on a daily time frame, we know what it did. It did a liquidity grab previously. Yeah. So tomorrow candlestick we are anticipating for a bullish. So what should we do? We should go on the other time frame, e.g. On a 2 hour time frame. Let's go on a 2 hour time frame. That's how the market looks like on a 2 hour time frame. But remember what we need. We need sort of a sell. We need some sales opportunity, not sort, but we need sales opportunities on it. So If that market does a change of character, then we are good. Our liquidity strategy is good. We are going to sell now. And how do we need that? Because this market is bullish. Yeah, it's supposed to buy though. It's supposed to buy. So I'm not going to enter this buy right now because of a liquidity grab on a previous day, on a previous on a daily time frame, on a daily time frame. Yes, on a previous daily time frame on it. So I need sales, right? So how can you get those sales opportunities? So here we are. If this momentum behaves, if this break of this market and retracement happens, then I believe so the market will continue dropping. Due to what? Previous previous daily previous day grab, and also technically a change of character to this zone for sales, right? So if this market decide to break below retracement, then we are going to sell XAUSD. So a new lower high, if that's happened, then you're gonna sell. But don't try to sell the market here because this is a zone for a buy. But we are not going to buy because of our previous market outlook, which it was on a buy because of a high low on a 4 time frame. This one. And high low on a 4 time frame, guys. That's what I mean. So I'm not going to jump on it because now the market is still bullish. Buyers are in the market in a panda, and yeah. But this on that zone, the market is supposed to buy though. The market is supposed to buy though. The market is supposed to buy on that market there, Videco. Soko inafaa kupanda because now on a break a retracement, but due to a daily time frame view, the market is supposed to break a retracement for a buy, sort of for a sell. Whereby if it does that break a retest, then well and good, we are good to go for a buy. We are good to go. If it does a break a retest below, we are good to sell. So that is it. Now I like to go on to talk about something else, which I believe so that most of you guys are asking on how to use Fibonacci level. How does this Fib works and how do we get entries on them? Don't worry, I'm gonna show you right away. So just need you to have a pen and maybe to rewatch the video once we are done, so that you can go and you know, you can go and get it to very well. So let's start it. So now I would like to go on what is Fib first of all? What is a Fibonacci? What is Fib? So Fib is a technical analysis tool to identify potential areas where the market might pull back to, is a technical tool. So this just generally is a tool, guys. Is a tool. Okay, this is a tool whereby hii tool tunatumia kujua pali market ita pull back to so that iendelee with with a maybe with a trend, with a specific trend, if it's a buy, if it's a sell. So it's just a tool. Okay, ndio tunatumia kuangalia pali market ita pull back ifike wapi ndio iendelee with that, maybe bullish or bearish momentum on that, maybe the market that you are on it. So for instance, maybe you are on a gold, tunataka kujua hii market ita pull back or to which zone so that you buy or may sell, you see. So now we have two types, we have the bullish one and then we have the bearish one. Okay, kuna ile ya bullish na kuna ile ya bearish. So ni ile tunaangalia, okay, ni gani tunataka sasa, ni gani market iko in favor, you get it. So I would like now to go for the first of all for the bullish one, for the bullish one. So now, if you have guys a bullish market or a bearish market, at some point, let me repeat, if you have a bullish or a bearish market, kuna some point market itafanya kuna bullish market that doesn't have an high high or an high low. So we use fib to know where the market will pull back to. Okay, tunatumia fib kujua hii market ita pull back up to this zone so that iendelee with that bullish or a bearish momentum. Okay, tunatumia fib kujua hii market itarudi hadi hapa ndio iendelee kubuy ama itarudi hadi hapa chini ndio iendelee kusell. You see? So tunatumia fib kujua pale zones zenye market ita retrace to. Are you guys getting that? So that's the work of fib basically. That's the work of fib basically. Now, in this case, we have a bullish market, yeah? And higher high, higher low, higher high, higher low. So basically we have a market that move like this. These are normal market. This is a bullish market that's okay, move creating higher, higher low. But we have sometimes a market that moves creating a very much impulse movement. That's, for example, maybe on news, you see? Maybe on news, Nakuta market too in a move, creating a very huge impulsive movement. And yeah, without even doing a pullback. So utachanganyikiwa now, how can I get a buy? How can I get an entry? You see? How can I get an entry on this market? So fib ndio inakuja kusaidia hapo, because fib itakuwezesha kujua hii market ita buy from this level. You see? Now, so we have two types of markets here. You have two types of market here. The market has already created a higher high without a pullback, and the market that has been moving, creating an high low. So two markets here, and high low market, and then the market that I find what we call a retracement. I find those pullbacks. I find anything. It's just moving on a straight line. So with the help of a fib, itakuwezesha kujua hii market itarudi hadi hapa ndio endelee kupanda. So for instance, with this one, this is a normal market that everyone can predict this one, right? Because whenever the market creates a new high, for example, in this market, it created a new high again. You see? So I know for sure this market will retrace to this level for more buys. Tajua zita retrace hapo ndio iendelee kubuy. Tajua hii market ita retrace hadi hapo ndio iendelee kubuy. But now, with a market like kwa market inakaa hivi, that the market has already created a new high without knowing where the market will pull back to. It's hard to predict where itarudi hadi hapa ndio buy, because haina high, right? So haina hii levels ya kujua hii market kama hii, haina level ya kujua okay, this market will pull back to this level so that it will continue with the buy. Okay? But now with the help of fib, sasa fib inakujia hapo. Now, hii ni tool yenye kila mtu anaweza kuwa nayo. Na utafanya nini? Utakuja hapo kwa tool zako, ya. Unaona kujua on the far left. The first the third click hapo. So kuna Fibonacci tool utachukua, so that's your fib level. So inakaa hivi. This one. Fib inakaa hivi, guys, yeah? That's the fib. That's the tool the tool that I'm talking about. The fib level. That's the fib level, guys. That's the fib tool that I'm talking about. That's the tool that I'm talking about. So now, for instance, we have a bullish market whereby the market has been moving, creating high, low. and then the one that has been moving, just creating an high, a very huge high without a pullback. So we use fib to know where the market will pull back to. For instance, this one, the market has moved, created an high, a very good impulsive movement. So tukitumianga fib, for example, now, yeah, this market started moving from this zone up all to this high. If you have been using fib and the market has been moving, creating an higher, if you want to use fib on a certain level, because tunatumia fib kujua where the market will pull back to, is a tool tunajua where the market will retrace to buy or maybe retrace to sell. Now, just a pullback to this zone, you endelee kubuy, right? Just a pullback to a certain zone yenye hatujui hapa, so fib itatueleza tujue, okay, hii market itarudi hadi hapa ndio endelee kupanda. For this one, you already know where the market will do. For this one unashajua hii market itarudi hadi hapa ndio endelee kupanda. But for this one, haujui market ita retrace hadi wapi ndio endelee kupanda. But now with the help of Fibonacci level or a Fibonacci tool, utajua this market will pull back to this level so that it will maybe buy or sell. Now, because this market is bullish, tunatumia bullish for now, yeah. Hii market in a bullish, yeah, is going up. So now tunachoranga the recent low hadi hapo, then the recent high hadi hapa juu. Right? Now, with the help of a fib, unaona hapa chini, the recent low, drag all the way to the recent high. So, hii fib itakueleza kujua hii market itarudi hadi hapa ndio endelee kubuy. Whereby, unaona hizi level 0.5, 0.6, that is the zone that we draw to know where the market will pull back to. 0.5, unaona hapa, here we have 1, 0.7, 0.6, 0.5, 0.3, 0.2, 0.0, and then 0. So, with the help of 0.5, 0.6 zone, tunachora hiyo level. Of a fib though. These are Fibonacci levels. Just set anything, it's just a normal fib. Now, with that fib, I already know where the market will pull back to. That's why now I'll wait for this market to retrace to this level so that it can buy. So that the market can buy. So this market will buy from this 0.5, 0.6 zone. This is the area where we are anticipating for a pullback for more buys opportunities. So because that's how the fib say, and that's the half of the movement that the market created. So if you have a bullish market or a bearish market, you use fib retracement. If you have a very impulsive one, yeah, if the market maybe has created a huge high or an if the market has created a very impulsive movement without a pullback, tunatumianga fib kujua where the market will retrace to. Okay, tunatumianga fib kujua where the market will retrace to. Are we getting that? So I would like to go to a market that has that huge impulsive movement and then to use fib to see, okay, has that market respected it earlier on? For example, here on now we have naiko hapa. So this is Euro USD. We're on a higher time frame, e.g. 1 hour time frame. We use fib to know where the market will pull back to for more sales, because tunaona ime sell sana without a pullback, what would you where the market will retrace to. But now with the help of a fib, that will help you to know where will this market pull back to for more sales or for more buys. Because this market is bearish, it means that, okay, more sales on this market because it has been selling. So very good to continue with the trend. So more sales. This is Euro USD. It shows us more sales. Now I need to use fib because I'm seeing this market has formed a huge impulsive movement down. Now we draw the recent low, then now the recent high. Tunachora kwa weeks, si kwa bodies, tunachora kwa weeks. So now nachukua fib yangu because the market is bearish, so naanzia from juu pale market ilianza kushuka, drag all the way to the low yake ni hapa chini. So nichachora high na low. Najua very well I need to use some specific levels which is 0.5, 0.6. That will be my fib retracement levels. So 0.5, 0.6 needs one upper. On hapo. That will be my fib level. Hapo ndio itakuwa level yangu. So I already know that if this market is gonna pull back, ita pull back hadi hapa ndio endelee kushuka. Because the market is bearish and because I'm not seeing my lower high, I have fib retracement level. So if this market retraces back to 0.5, 0.6, I know it's gonna drop from that zone. So I'm just waiting for a pullback or for a retracement to that zone for more drops. So a short position here, and then the market is gonna drop massively from my area of fib level, from my fib level, guys. So I pull back to that zone for more drops opportunities on it. That's zero USD. That's how fib work. I would like to go to the other one, maybe. Also on this one, here we have a BTC USD. Here we have now BTC USD. Now the market has did that huge impulsive movement from, if you can see it here. I'll draw my recent low, which is this one, and then now my recent high, which is this one. Now because the market is bearish, I will use fib retracement. And now fib from the high, which is this one, drag all the way to the low, which is that one. I already know my zones. This is 0, this is 0 0.2, 0 0.3, 0 0.5, 0 0.4, 0 0.6, 0 0.7 and above. So I know that, okay, my zones of interest is 0 0.5, 0 0.6. So I'll wait for this pullback to this zone for drops. Whereby, if this market is gonna will drop from these levels 0.5, 0.6, it will be very nice sales opportunities on it. So a short position here, sorry. So I'll draw my 0.5, 0.6 area upper. Now just basically wait for that pullback to that zone. So I just a pullback to this zone for drops. So a short position here, once if this market returns back to this zone, and then now we are good to go for sales. Easy. So stop loss a little bit above the area of interest, and then you are good to go about the fib. And guys, that's how Fibonacci tool work. Either bullish, let's go and find one for the bullish. That's for the bearish though. It's a of the bullish, yeah. That one a bullish market maybe. This one is a bearish one. A bullish one. This one for the bullish one. This is USD JPY. There was a strong dollar, that's why you are seeing it going up, pumping really fast. Now this is a XAUSD on 1 hour time frame. Okay, this is XAUSD JPY on 1 hour time frame. And you have seen this market has created a new high and a huge volume up. The market imepanda sana with a huge volume, juu sana. What does it mean? We need to check for a buy because the market is buying, so we need to be on those bullish momentum. So what should we do? We draw the recent low, then we draw the recent high using fib, because now mark your areas of interest, which is 0.5, 0.6, and now this market will buy from this level. So just waiting for a retracement to this zone for buys. So just a pullback to this zone for a buy opportunities on USD JPY like that. So basically, I'll be waiting for this market to pull back to this zone so that I can take a long position. Time frame I'm using on a 1 hour time frame. You can use any time frame, but make sure it's 1 hour time frame and above. And also sometimes that means time frame. But more than that, lower than that is not required. I won't recommend that because sometimes it doesn't respect much. But higher time frame, well, it respects it a lot, guys. In a respect sana. So that is USD JPY using fib levels. That's the zone that you have seen an entry on it. A retracement back to the OB for a buy, and then yeah, basically a pullback to the zone for more long position on it. Let's find out another one for a bullish. And just disclaimer is once if you have a bullish momentum without a pullback, that's when now we'll use them. Kama tuna hiyo, you won't use them at all. For example, this is Euro AUD. This is Euro AUD, guys. Yeah. So I need to use this market to see, because we had a huge impulsive movement here, right? So now we draw the recent low like this one. Now the recent high, this one. So using Fib from the high, drag it all the low. This one my recent low here, and now you draw 0.5, 0.6 zone, and then now wait for the candlesticks to tap inside that 0.5, 0.6, whereby ukiangalia the market retest back to this zone. Well, you already hapo ndani ya 0.5, 0.6, unaona ina drop. Very nice. So these are very, very well explained Fibonacci out, na imefanya vizuri sana. So it retraced back to this zone and the market dropped to perfection. So yeah, that is it, guys, and that's how we use Fibonacci, and that's how we use Fib tools to check the entries. Now from there, we'll continue from there tomorrow. Have a lively, a peaceful week. So make sure to